Hey everyone, in this video I'm going to answer which company is the better stock to buy, Nikola or Workhorse Group. To answer that question, I'm going to compare these two EV companies on several financial metrics and then answer which one is the better buy. Starting with revenue, so let's get right into it. Trailing 12-month revenue came in at 60 million for Nikola compared to 6.7 million for Workhorse. Nikola is further along in ramping up production and delivering its electric trucks, and it's hoping to soon produce more of its newer technology trucks in the third quarter. So just on the cusp of ramping up for Nikola, but in the second quarter compared to the first quarter, production actually decreased. But third quarter, it's hoping to rebound again. And again, a lot will depend on the company being able to have enough capital in order to ramp up that production. The next thing I wanted to compare these two on is operating income, or operating losses, I should say, because they're both losing money. Nikola losing 151 million in its most recent quarter compared to 25 million for Workhorse. If we compare it to revenue, Nikola lost about 2.5 times revenue, while Workhorse lost about 4 times revenue in terms of operating income compared to revenue. I also wanted to look at cash flow from operations, and Nikola is heading in the wrong direction fast, losing 180 million in cash from operations in its most recent quarter, 3 times its revenue in the trailing 12 months, compared to Workhorse, who lost 32.75 million in cash from operations, about 5 times its revenue in the trailing 12 months. So each of these two are heading in the wrong direction and going there quickly. Now, the next thing I wanted to look at, since they're losing so much money, is how much cash do they actually have? And Nikola has 121 million in cash as of its latest update. Now, it's been in the news, and I've reported on Nikola trying to raise more capital by selling additional stock. It wasn't able to gain that approval in July. It's hoping to gain approval to sell additional stock in August as a result of a change in Delaware corporation law that might allow it to sell this stock as before it has failed to gain approval from shareholders. Workhorse Group has 80 million in cash on hand compared to the most recent quarter where it lost 32.75 million. According to that pace, it has at least 2 quarters to go before it needs to raise more capital, so it is in a better position cash wise compared to its cash flow from operations compared to Nikola. And finally, I wanted to look at their valuations, and I chose to look at the forward price to sales ratio because each of these two are not profitable on the bottom line. They're also not generating cash flow either. So I chose to use the forward price to sales. And using this metric, Nikola is about 4 times more expensive than Workhorse, trading at a forward price to sales of 3.6 compared to Workhorse trading at a forward price to sales of 0.9. So, to answer the question I posed in the headline, if I had to pick one of these two stocks to buy today, which just to be clear, I would not buy either of these two stocks, but if I had to pick one of them, I would pick Workhorse Group. I like that it has more cash on hand compared to its losses in terms of cash flow from operations. I also like that it's trading at nearly 1/4 the valuation of Nikola. So for those reasons, primarily, I would go with Workhorse Group stock if I had to pick one of these two very speculative stocks. Now, these are very speculative, I will warn you. These are only for investors who are looking for high risk and the potential for very high return, which you can get with either of these two stocks. You can get high risk and you can also get very high return. The stock prices can increase substantially in a short amount of time. All right, so that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.